Hello and good afternoon, everyone. Welcome to another session of Markets at a Glance series with FX Pesa. My name is Rufus Kamau. I'm your market analyst at FX Pesa, and we'll be looking at the top market events this afternoon. We'll try to understand the current market developments and potential plays for the New York session, which basically starts about 23 minutes from now. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So at the same time, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So, of course, today being the 29th of October 2024 is only 7 days away from the US presidential election. So we are looking at just 7 days, and it's a very heated political environment. There is a lot going on. So we'll be trying to understand where the markets might be headed next, the potential impacts and reactions to this election, and how you may respond as a trader to take maximum advantage of this. So let's get things started. Of course, we have quite a number of key developments happening in the New York session. So let's get this done. So I'll be starting with the economic calendar. So this is the Forex Factory website. We have had quite a number of data announcements. Among them, the unemployment rate in Japan dropped to 2.4%. This was announced very early in the morning, just after midnight. The BRC shop price index for the UK showed a drop in prices, negative 0.8%, a drop that was bigger than expected. And the consumer climate survey from Germany was down to negative 18.3, which is an improvement from the previous negative 21. The money supply in the UK month over month was up 0.6%. This is quite concerning. That is for M4 money supply. Mortgage approvals were up 66K, which was higher than the expected 65K. Net lending to individuals was up to 3.8 billion, which missed expectations of 4.1 billion and the previous reading of 4.2 billion. So good trade balance in the UK worsened to negative 108.2 B, in the US. This basically shows the increased appetite for spending within the US economy. Remember, the US is a net importer, so the balance between exports and imports shows a much wider difference, meaning that the Americans are buying a lot more goods. So preliminary wholesale inventories month over month, and this is from the US, were down negative 0.1%, meaning that inventories are going down as people buy more. And this is quite concerning. It shows signs of a strong US economy. And remember, the biggest news event that we're expecting in the next couple of days will be the US election on 5th, and then the Fed interest rate decision on the 7th of November. So on the calendar, we'll be getting a couple of more details. So let me refresh to see the data that just came in at 4. So we have the Case-Shiller Composite Housing Price Index, which showed an increase of 5.2%. And this compared to the previous reading is lower. The previous reading was 5.9%. Of course, we expected a much bigger drop to 4.9%. So we are seeing that the housing prices also remain significantly high. So the HPI was up 0.3% of the month compared to the previous increase of 0.2%, which was revised higher from 0.1%, meaning that houses are increasing in prices. We have also seen the bond markets rallying ahead of the US elections, hitting a 3-month high, and this is quite concerning based on the expectations we had previously. So, by the Fed cutting rates by 50 basis points in the previous meeting, we expected to see the dollar weakening, bond yields going down, but then what we are seeing is the exact opposite, the dollar being really strong, bond yields continuing to rise, housing prices continuing to rise, and the American appetite for spending continuing to increase, which shows a very strong economy. And in that case, we could be seeing some resurgence on inflation, and that's a subject for another data point later in the week, where we'll be looking at the core PCE price index. So as for the major highlights for the day, we have four major things happening. One is the CB Consumer Confidence Survey, or the Conference Board Consumer Confidence Survey. So in the previous reading, it was 98.7, and we're expecting an increase to 99.5. So if we see resumed confidence in the US economy, that could bring in more inflationary pressure, which might lead to the Fed perhaps even holding rates higher for longer, or just going for a minimal 25 basis point rate cut on the 7th. So as for the JOLTS job openings, which is an index that basically measures the number of new jobs being advertised in the US economy, in the previous reading, it was at 8.04 million, and we're expecting a further drop to 7.98 million, which shows some further weakness in the US job market. So remember, the non-farm payrolls have been revised lower for, I would say, 8 out of the last 10 months. And in the last reading, we had a surprise increase in the non-farm payrolls. And the next data point we'll be getting for the non-farm payrolls will be happening on Friday this week at 3:30 p.m. So this will be a leading indicator into what we expect in the non-farm payrolls on Friday. So we'll be combining several more data points. Of course, we'll be having the private sector jobs, which is the ADP non-farm payrolls, which will be coming up on Wednesday at 3:15 p.m. That's tomorrow. Then on Thursday, we'll be getting even more data points. I believe we'll be getting what? The core PCE price index combined with the employment cost index, as well as the weekly unemployment claims. And that will be ahead of the official non-farm payrolls on Friday at 3:30 p.m., which will be the main event of the week. So back to today's economic calendar, we have two speeches from two central bankers. So the first speech will be this from the SNB chairman Schlegel at 9 p.m. And this will be very important, especially considering that the Swiss inflation rate has significantly dropped to below 1%. And we'll be looking to see the direction of monetary policy in Switzerland. So that will be a key speech, and we'll be expecting to see some market reaction from that. So we could be seeing some volatility in the Swiss franc pairs later in the evening at 9 p.m. Then at 10:30 p.m., we'll be getting a speech from Bank of Canada Governor Macklem, and that will also be bringing in some more insights about the Canadian monetary policy. And of course, there's a good chance he'll be sharing some information about inflation, which has significantly dropped in Canada. Of course, they have had over 3 rate cuts consecutively, and we could be seeing some more reaction from Canadian dollar pairs, mainly resulting from the speech. So the currencies to be focused on this afternoon in the New York session are the US dollar, the Swiss franc, and the Canadian dollar, which could be having more impact. And of course, ahead of tomorrow's market snapshot, we'll be getting inflation data coming from Australia, with the expectation that inflation drops to 2.3%, down from 2.7%. And this could be a leading indicator that the Reserve Bank of Australia might now start considering looking at rate cuts on the next meeting by the Reserve Bank of Australia. So that being said, there's quite a number of other things that we will be expecting to see in the markets. So key highlights in the day, and I'll try to share here. German consumer morale beats estimates. We already covered that. US wholesale inventories, unexpected fall. That is something that we also already considered on the calendar. US goods trade deficit rises to over 2-year high. Also, we have covered that. UK mortgage approvals above forecast at a 2-year high. That we also saw in the economic calendar. European shares rise, earnings in focus. This is very important, especially if you are a person who specializes on European equity indices. You might be interested in looking at the performance of the Euro Stoxx 50 index, as well as the German DAX 40. It's also performing really well today, and you might also extend that to Asia and look at the Nikkei 225 index and how it has rallied this week. So Swedish economy unexpectedly contracts. That was not on the calendar, and Singapore producer prices fall the most in 13 months. So besides that, all the talk in the market right now is about the US election, and there's a lot of tension happening in the markets as investors don't exactly know at what point we'll be seeing a change. So let's look at something. Try and share a different window. So I'm hoping everyone can see this. So these are screenshots from Bloomberg, and it basically covers the chart from Real Clear Politics, focusing on the US polls going forward towards the US elections. So the chart was taken today, and it basically looks at the performance of US President Trump, former president, and the current Vice President Kamala Harris. So the white line denotes the trends for the Trump campaign, and the blue line represents the trends for Kamala Harris. Of course, all this period where you see the line being flat, the overall expectation in the market was that Biden would be competing with Trump. So when Biden dropped from the race, and this was towards the end of June, this is when we see the popularity of Kamala Harris beginning to rise as a potential candidate. And somewhere in early August, Kamala Harris overtook Trump in the polls and remained high up until last week. So last week is when we had some major developments with Trump appearing on the Joe Rogan podcast, doing several events on the campaign. There was also the speech with Elon Musk on X that got out of attraction. And of course, we had the most recent event on Madison Square Gardens, which basically increased the popularity of Trump, thereby overtaking Kamala Harris on the polls. So it's a very contested election, and from what Real Clear Politics does, they do not conduct the national polls themselves. They basically aggregate from other polls from other providers across the economy. So they have been correcting different polls, combining them together to get a proper index that shows the overall polls across the US economy. So far, Donald Trump is leading with 48.6% probability of winning. And of course, Kamala Harris is also very close with 48.4%. So the difference is about 0.2%, which means it's a highly contested election. So we should be expecting to see some serious activity from that. So also, it's very important to be looking at other indicators. So looking at other indicators here, I'll be looking at what? So this is the official countdown. So we are looking at 6 days, 7 hours from now. This is when the election will be happening. It's on Tuesday next week. So Poly Markets is a betting market or a prediction market, and this one is based on bets. So a lot of participants in the market have placed a lot of bets, and they are trying to project who will win the election. So for Donald Trump, notice that there's a prize money of over 2.6 billion. About 66.1% of the bets are projecting that the former President Donald Trump will be winning, and 33.8% are betting that Kamala Harris will be losing. So two indicators to show the potential outcome of the elections are basically showing Donald Trump leading. So one is the official polls, and the other one is the betting markets, where the participants have placed wagers on their votes. So In that case, that's the overall expectation in the US economy. So, what do we expect to be happening in the markets when eventually the election happens on 5th? So, there's quite a number of things to take from this. So, the very first one is that whenever there is a new US president, the stock market usually performs well after that. So, in the first year after election, whether it's a Democrat or a Republican president, we expect the stock market to be doing well. So, what are the key concerns in the markets right now? So, the key concerns in the markets are one, if there is a Republican president, do they have control of Congress? And by Congress, I mean both houses, the Senate and the House of Representatives. So, as of today, the two houses are quite balanced. And even if we get a Republican or Democrat president, don't expect much of a variation in policies. So, by variation in policies, I mean if you become president and you have control of the Senate, the House of Representatives, then you're able to pass your policies easily and you can have some abrupt policies that may disrupt the markets. So, the markets tend to favor a scenario where there is I would say, a political gridlock where the president doesn't have control of both houses and it's difficult for him to or her to change policies abruptly. So in this case, we don't expect that kind of scenario to be happening, and that may explain why most of the US equity market indices, like the SP 500, the Dow Jones, the Nasdaq, are very close to all-time highs. So that's one of the things. The other thing, the US stock market is darling to investors globally. And we tend to see out of investors betting on that market, as well as the dollar and the US treasuries. So we have seen an uptick in US treasury yields happening this week, hitting 3 months high. The dollar index is breaking some several weeks highs, and that's quite positive, especially for forex traders. Whereas the equity markets are facing some kind of profit taking, and we are seeing the rally slowing down. So we'll be looking at the charts later to understand these key developments. And once we understand that, then we will be able to trade from an informed perspective. So I'm looking at the comment section. Hello, Jason, and thank you for joining the session. You can see Peter Kihenjo, Phoenix, Paul Kerry, Tiger Music, thank you for joining. Noniza Jack, good afternoon. Emmanuel Muhoro and Boniface Watahi are in the house. So I appreciate you guys. Remember to like and subscribe to the YouTube channel. If you're watching this from X, remember to like and share the live so that also other participants in the market can benefit from this live session. So as you may have noticed, today I'm rocking an orange t-shirt. Some of you might argue it's yellow, but it's indicative of the key highlight of the week, and what's happening in the markets is basically a very strong rally in Bitcoin. And you know, guys, that I'm very positive about Bitcoin, very passionate about it. And so far, we are getting out of a 7-month range. So from what you can see here, Bitcoin had a very strong start to the year. So in the month of January, we had all this strong rally. Then in early February, the rally extended all the way up to around $72,000 per Bitcoin. So, sorry, 72, 73, almost $73,000. And since then, we have been stuck in this range between these two trend lines. So 1, 2, 3, 4, 5, 6, 7 months. So for 7 months, we were stuck in this range where the markets would range between around $51,000 to around 66. And now we have finally broken out of that range. So from a technical trader's perspective, we should be expecting to see yet another run from the current breakout. And if the previous one is anything to go by, it means that we could be seeing another leg up that could potentially take us to around $100,000 or even just 90. So it's quite positive for Bitcoin traders and investors around the world. So we are seeing a potential rally towards these levels and higher if the previous leg is anything to go by. So far today, we are seeing an acceleration in price. after the breakout yesterday, and we could be seeing some further price action happening in the New York session. So it might make sense to be monitoring the current flag that is seemingly playing out around this area here. So notice how in the last couple of hours, we haven't had much of an activity. Sorry for that. I'm trying to use a trend line here. So something that might break above these two will indicate the potential direction during the New York session. So that's something that is key for the day, and you might want to observe that. So on the next part is the dollar index, which has been surprisingly bullish. So on one side, we were expecting that these bets were being fueled by the geopolitics happening in the Middle East, Russia, Ukraine. But so far, we have seen 1, 2, 3, 4 straight weeks of bullish momentum in the dollar index. And this being the fifth week, we might continue seeing some more bullishness as we head into the elections. So in this case, it's more likely that the dollar index will continue with its strength that it has depicted for the better part of the month. So if you've been thinking of October, it's more likely that the dollar has been the one experiencing the October instead of equities. So far, since the month started, we are up 3.98%, almost 4% for the dollar index. So we should be seeing this being reflected in major currency pairs. Of course, we have seen the channel that has been formed in pound USD, and the market has been oscillating between these two trend lines. With the current market price action indicating that the market is rejecting the upper trend line after rejecting it yesterday. And of course, we have had similar levels on Friday and Thursday and Wednesday last week, acting as resistance. And now we might see the market rejecting that resistance and pushing further back downwards. So a key likely target, if the market strongly rejects that area, could be the low that we saw yesterday. So potentially the market dropping to around 1.29430. Of course, we are seeing the stronger bearishness happening in Euro USD, where we had a breakout initially. So notice how on the trend line here, the market was attempting to move higher. We had a higher low, a higher high, but the market did not complete the move yesterday. And now we are seeing some push further back downwards. We have broken below yesterday's low, and if this momentum continues in the New York session, then we should be looking at last week's low of 1.07608, especially if the dollar strength were to continue today. So the UK stock market index are not doing really well. So after the strong rally yesterday, notice how we found some resistance around this area here. Tested the area thrice before the market reversed and started moving down this morning. Now we are seeing an acceleration of this bearish momentum, which will likely extend to around yesterday's lows. So we should be expecting to see a drop to around 8,217. So as for the pound yen, notice how we opened the gap. The market was unable to close the gap. And now we are seeing an acceleration higher, indicating that the yen continues to weaken in the markets, especially after this breakout. Notice how the market was trading within a triangle, more of a rising wedge. And after breaking out towards the upper side, retesting and continuing, we are seeing this continuation being extended on the 4-hour chart. And our likely target, as we discussed on Monday, is 200.477. So there's still more room for upside for the pound yen. So for AUD-USD, clearly we were expecting at least some good bounce from here, retest this area here, which is an idea we discussed yesterday. The market moved as expected, but did not get to the target. Of course, pulled back downwards, and with the current strength of the dollar, there was a breakout towards the lower side. So looking at the daily chart, there's still more room for downside, which implies that by tomorrow, we should be expecting some further drop to around 0.64890. So for USD JPY, we moved back as expected. We were looking to cross this gap. Don't know if it was a complete cross. Not yet a complete cross, but a significant attempt to cross the whole gap. And once the gap was closed, the market bounced quite strongly. And today we are about to beat yesterday's high, forming a new weekly high. So the current trend has been extremely bullish, and we should be expecting to see some further bullishness. In this case, targeting the next area around 154.863. So the Nikkei 225 index has been quite surprisingly bullish. So notice how the market opened with a big move downwards, which grabbed some liquidity here, and then immediately the market reversed. Then today we are seeing an acceleration of the same, and now it seems like the market is moving back downwards after hitting that high. So I want you to observe this area here and how it was acting as a very strong support. So in this case, we could be getting a book market pattern where the market breaks a major resistance, which was this area here, goes back down to retest the area, and then you get a continuation. So we should be looking forward for a nice bounce from this area. And once that plays out, if you see evidence of buyers coming back in, then you look for your positions around this area. So it hasn't happened yet, so it's more of a wait and see kind of a scenario. Gold has just broken to the upper side. So notice how we started the day with bullishness and had some good bullish momentum in the Sydney session. Then from there, going into the Tokyo and London sessions, it has been more of an up and down, up and down, up and down, up until the last couple of minutes. In this case, I would say about 45 minutes. And now we have a clear direction that gold has broken out towards the upper side. So the key challenge here, after the big sell-off that we saw last week, was whether the market will make full recovery to this point. So we managed to capture an entry here around this support area here. And the market went up, didn't get to the target, struggled, kept going up. And then on Monday, pulled back and kept going up. And today we are finally testing the all-time high. So the all-time high was hit last week, and now the market is going to retest the area and potentially break into a new high. So once we break 27.58, there's that expectation that we should be expecting to see an extension of the rally to 27.80 and potentially 2800. So 2780 is quite a distance, and 2800 is also still quite a distance. So still more room for upside potential, given that some investors will be looking to take some safe bets ahead of the US election. So also gold has been one of the best performing assets since the year started. So notice the overall trend since the year started here in January has been just bullishness. And now we are on the verge of cruising into a new all-time high. So if you're looking for a trade for the day, then this should be it. That is potential rally in gold from 27.56 to 27.80. So already we are seeing volatility coming in since the New York stock market just opened. So this momentum is expected to extend higher. So also be on the lookout for the resistance here. We could be seeing a rejection of this resistance area, but chances are the market will be breaking and moving higher. So Brent oil had a big sell-off, and I think we explained this. The main reason we had this big sell-off in Brent oil was because over the weekend we were expecting Israel to be striking Iran and perhaps strike their oil resources. So upon knowing that Israel did not strike Iran's oil infrastructure, there was a big sell-off as traders were unwinding their bets, and as a result, we saw almost 5% drop on Monday. So this here from this area all the way down was about 5%, and it later extended and we closed the day here down 5.21%. So notice how the market struggled this morning to drop, moved back upwards, retested the low of the spike here, and now we are seeing an overall reversal, indicating that during the New York session, we should be expecting some further downside momentum in Brent oil prices. So from the daily time frame, this is how it looks like. So if I zoom out and we try to identify targets, then the overall expectation is that prices continue pushing lower and eventually get to around $68.531 per barrel. So US equity indices on a sell-off, and as I mentioned, we are seeing this caution happening across board, where markets that were clearly forming new all-time highs, in this case, the Nasdaq 100 index, now facing some potential pullback ahead of the US election. So the pullback is happening here. So notice how the candlesticks have been forming on the daily. So notice the long tails. So I'm trying to remove some of these so that the chart is clear. So we had two candlesticks with long tails towards the upper side yesterday and Friday last week, indicating the rejection of higher prices. On the 4-hour chart, this is how it looks like. And after the rejection of higher prices, now we expect the market to be moving back downwards towards support areas. Of course, we have this support level that has been holding quite well several times over the past couple of weeks. So in this case, a potential drop all the way back down to 20,117 might be playing out this week ahead of the US election. So the Dow also having a very and strongly bearish week last week after forming a new all-time high indicates that we are already back into this range. Notice the time that we were stuck in this range and we were hoping that the market would eventually break out. So the breakout happened, a retest and a continuation higher. Then we got back into the range last week, and now there is that potential that the market continues dropping, in this case dropping further towards the bottom side of this range, around $41,871 per share of the Dow Jones. Of the Dow Jones. Then for the SP 500, we managed to capture a nice bounce from this area towards our target here. This played out within 2 days. Then on Monday, a big jump followed by some erasure of some gains. And today, it seems like quite a bearish day. We are almost breaking below this area here. Notice this area was a key level support, and breaking below this might imply that now prices head straight for $5,766 per share of the SP 500. So the Russell is also not left out. So we are still expecting this bearish drop to this key level support area before we see the next major movement. So looking at other charts, we have the dollar trading against the Swiss franc, clearly mopped up some liquidity here before bouncing strongly. And now we are almost getting to yesterday's high, which will likely be acting as our resistance for the day. But then a break above that might imply a further positive trade, but that hasn't happened yet. So New Zealand USD is still in this, I would call it a falling wedge, but it's more likely looking like a channel. We have already hit yesterday's low, so we should be observing to see if there's some further bearishness in the market to be looking for shorts. So far, we don't see any major support areas from here. So perhaps we should be expecting to see some further drop-off. So clearly, there's still more areas to target. Not very far off. We are looking at 0.59386 as potential targets if the market continues with this bearish momentum. So 0.59386. So dollar trading against the Canadian dollar, we had some nice pattern here. So on the 15 minutes chart, notice that this was the prevailing, got the wrong line. So this was the prevailing support line, and for resistance, we could say if you combine these, if you combine this high versus this high versus this high, then it makes more sense to work with the higher one. So the high of day yesterday versus the high of the Asian session, and now we clearly have a breakout towards the upper side, and the key determinant would be whether we break above this high. So a break above that might imply we head even higher. Of course, on the daily time frame, we had already projected this, that this strong bullish momentum could potentially extend to the previous high that we saw on the 5th of August. So clearly a strong projection towards 1.39458. So that's it for the day. Thank you very much, guys. Remember, we'll be having an event in Meru. That should be on the 7th of November. We are officially launching our office in Tanzania this Saturday. So if you're watching this from Tanzania, know that we will be having a big event there to launch the office. And of course, we'll be recording a Bullish Banter podcast. So a lot more is being unpacked. So let me see if I missed any question or comment. Hello, Boniface Watahi. Thank you for joining. Emmanuel Muhoro, Salam alaikum. Wanjohi says it looks yellow to him. This is the color of gold or Bitcoin. So in this case, it's indicative of the bullishness we are currently experiencing in Bitcoin. So if you don't know about it, kindly take some time, study, and buy some. Moin Kathure, thank you for joining, and hi. Hello, J Squad, thank you for joining. So any idea of how JOLT and consumer confidence is going to affect the DXY? So this is a really good question. JOLT's job openings dropping shows some weaknesses in the job market, which was the trigger for the Fed cutting rates by 50 basis points. So any form of weakness in the job market will be taken as positive for the DXY. However, if we see, let's say, the number of new jobs increasing, that will be bad for the DXY. Now, Subiria Mombasa Rufus, hopefully we'll be able to organize an event for Mombasa. We are still pushing through that. It's a very short period between now and the new year, and we are trying to squeeze as many events as we can. So remember, we just did Eldoret, we did Nakuru, we did Nairobi event last weekend. We also looking to do Thika, we have Dar es Salaam, we have Kampala. So hopefully we'll be able to squeeze one. Ule jamaa wa silver ni mimi. Nice. And we haven't checked on silver today. So there's a nice pattern actually on silver. I don't know why I forgot to check on that. So this is what's happening with silver. We were in this triangle here. So this is what was happening on silver. Then we had a breakout yesterday, and the market had to retest the same trend line. So notice the breakout, market gets out of the trend line, then goes right back on the same trend line. And then after that, we get the bounce. And as a book pattern, whenever you have these, you expect the next leg to extend all the way to the beginning of the pattern, which is all the way up. So in this case, we expect a strong rally in silver, extending all the way to $34.834 per troy ounce of silver. So thank you for mentioning silver. I had almost forgotten that. NAS has been showing me dust, maybe perhaps research a potential short position, especially considering how the market is reacting at open. So just give me a sec. So NASDAQ getting quite volatile at open. So remember, the first 30 minutes after the market opens, you get all this kind of volatility. If you go to the 1 minute chart, you can see all this volatility. Still have to be patient, wait for it to come down before you execute your positions. So usually at 5 is the best time to make an entry for the NASDAQ once you have seen the direction the market is taking. I also noticed that it's also happening on US 500 and the Dow Jones. So let's be patient. This might have been a liquidity grab. So this is something you need to be concerned about, especially if we get to 5 p.m. and the market is not yet back here. That might be one of those liquidity grabs where the market drops and then eventually makes a rally in the opposite direction. So as usual, if you know mchezo wa tauni, then be prepared to take advantage of that. There's also a request to visit Nyeri. We'll also be considering that. So a good question here. This is from Felix. Does that mean if silver might go to those highs, then gold might also move higher and higher? Yes, absolutely. So I'm expecting a very strong rally from both shiny metals. So thank you very much, everyone. Thank you for your time. Remember to check out the latest episode of the Bullish Banter podcast. It should be available on YouTube as well as other podcast platforms. The beautiful thing about watching these on YouTube is that you are able to view the video too. Remember, we converted the podcast to video, so we'll be expecting to see some good developments. So I'm trying to find the podcast link. So is the US market at risk? This is the name of the podcast. So I'm sharing that on the comment section. I'm hoping you'll be able to get the link. Yeah, it's right there on the comment section. So it's quite insightful. That's why I highly recommend it. So also check out the latest episode on the Financially Incorrect podcast. And remember, if you're just beginning your trading journey, you can go through the Novice to Pro series, which is available on the FX Pesa YouTube channel. And if you don't have an account, check the links in the description below to register for an account and get started with your trading journey. So that's it for today. Thank you very much, everyone, and I wish you a happy trading day. So thank you, Shikodairo. Thank you for your comment. Thank you, everyone, for your participation. Remember to like, share, and subscribe. I always appreciate when you guys share this information so we get to reach more traders and hopefully the community grows stronger.